Hey everybody, welcome to the position analysis video. We did do a few things to our portfolio today, so I'm just going to run through the charts to update you on what happened and transpired across certain positions of ours. So jumping right into Costco, clearly Costco has negated, or sorry, I should rephrase that. Costco has not negated the topping tail. However, it's looking very likely that it does. That being said, this power move in Costco is certainly one for the record books. And speaking of records, Costco has officially now trading at the highest price to earnings ratio it has ever traded in history. So that's roughly trading at a 48 PE, which is astonishing. Almost 49 PE in Costco. That is like a tech stock. It's higher than Apple. I believe it's higher than Microsoft. It's higher than Amazon. It's certainly not higher than Tesla. But it's high for the company that it is. Now, the consumer staples have been doing exceptionally well due to the fact that people pricing in high inflation, they're looking to buy, deals, they want big box items. So we added to our short at 600. I still think we're in a tremendous opportunity here to make a good chunk of profit on Costco. This thing has gone vertical. Like a lot of these charts that we've seen lately, there's generally this blow off top before the markets make new lows and start to trend downward. Costco is a power stock, so it could still keep going higher. Basically, tomorrow's price action, if we close above this topping tail, then we negate this topping tail and we have to reassess, and there could be further upside. That being said, if you look at it on a weekly basis, Costco has pretty much gone vertical. It's had a very, very strong move. If you look at the mean reversion channel that it should be trading in, it should be roughly over here. So typically in a tightening environment, stocks always, their valuations and their price to earnings multiples and other metrics always get shredded. They truly do. If you look at the last tightening cycle here, Costco fell 27%, sorry, I'll rephrase that. Costco fell 23%. Okay, so there still stands to suggest that there's a lot more downside for Costco, and it would have been nice to see our topping tails hold, but you can't always win them. I still think we're in a phenomenal average. We're pretty much at the all-time highs in terms of our position. We have a little more room to add to our position. If this goes higher tomorrow, you can expect another alert for me to add. And where would I potentially add? Well, I would look to add at the 632 level, which is a long shot off. But just depending on how the price action goes, say it's a straight shot of 6 10-minute candles in a row, I would consider pulling the trigger anywhere, $10 to $20 higher. Okay? So roughly in and around this 620 level and 631 level, I will look to add to my Costco short if we have a final pump and rally. But this thing is extended. It has its highest price to earnings ratio ever. It's trading more like a tech stock. When you look back at the price history, Costco's PE should be between 20 to 35 at the most, not 48. So there's still substantial downside that Costco could see. If we look at Amazon, we unloaded our Amazon short here at 3,092, and what a beautiful unload it was. It had a huge bounce off of that 3,092 level. Basically, one of the reasons why we did that, we had this downsloping trend line, which I'll go to the hourly chart so we can see it better. You had this downsloping trend line connecting pivot high to an impulse move breakout zone, as well as you had this level of support coming in just above these pivots. Okay, so I thought that was a substantial smart move to get rid of some of our short positions in the event that the markets bounced. And certainly we had a 1, 2, 3 candle day down day on Amazon, and I figured let's just reassess this. The markets were looking like they were going to bounce, so it was a great position for us to unload. And do I still think Amazon has more downside? Absolutely. Absolutely. In the grand scheme of things, I still think Amazon has a tremendous amount of downside. If we remove all of those, One of the reasons why I loaded was right into this 50-day as well, and I expected a natural bounce. One thing that really deters me is the fact that we have this open gap up here. I really am big on gaps need to be filled, so I'm looking to potentially re-short Amazon if we can get a small bounce in the markets up here. I will even consider adding before the gap fill into this red bar high, which may just coincide with the hourly chart 50-day moving average. So basically anything in the range of this 32.38 zone and this 32.79 zone, I'll be looking to start accumulating yet again another short position. So you often can rinse and repeat. If you know the macro trend is definitely heading lower. So you should be able to play the macro trend to your advantage. Okay? So let's just leave that trend up there. Flipping to Walmart, that was the final trade that I issued today, late in the afternoon. Right away on Walmart, we have a 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11-day time count, 11-day candle count. So people tend to buy these breakout rallies, and we look to do the opposite of what the market is doing. So when there's fear and blood in the streets, we're buying. When there's all this strength and overextended stocks and valuations, especially entering the economic backdrop that I believe we're entering, is a recession, it was a no-brainer to pull this short. That being said, we have a time count on our hands here, a daily time count. Just like Tesla, we had 11 candles in a row, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Sorry, 10 candles in a row. It was Apple that had 11 candles in a row. But nonetheless, Tesla had 10 candles in a row. Apple had 11 candles in a row. When you flip back to the Walmart chart, you have the same pattern going on. 11 candle count, and we should see a pullback. So it was a no-brainer. In the event that we don't see a pullback, there is this parallel channel. Let's just flip to the weekly chart so we get a better sense of it. There's this parallel channel that you've been trading in since 2015. You can clearly see you have support zones at these pivot lows where you tag it multiple times, and then you tag this resistance zone multiple times as well in the 2020 and 2020 as well. So you could float up with Walmart all the way to the top of this channel. So that's why we inched into this position. It's a starter position. Roughly you could have another 7 to, well, depending on how long it takes to get up there, 7 to 10% upside. So in the grand scheme of things, it's not that much, considering I'm willing to take this Walmart short up to 5% of my portfolio. Right now, like I said, we only have 1% short in Amazon. In Walmart, so it's a very small position, but on a time count, dual factors, extended. You also have this trend line that you ran into. Let me just pull it up. So you have a little bit of a trend line there with pivot high to pivot high. You couldn't close above that trend line, so you always failed, and you're now tagged that trend line today. Okay, so that's another important one that I'm watching. I do like this Walmart short. It's very similar to Costco, but nonetheless, I think it's actually even a better setup than Costco potentially, being on the fact that it is on a time count and you haven't really seen a pullback for a substantial period of time. So Walmart should, where I expect the downside in Walmart to occur, let's just go back to the weekly basis. You have tons of support in and around this range here. Okay, that's going to be your big level in my opinion, of where you find major support. Will we hold it that long? That's a substantial way down. So a lot of the times I like to take my profits and run as the risk to reward setup changes. So it's roughly a 12% drop. You know, I may start looking to exit before then. A good risk to reward setup is when you negate this whole power move. That's often a really good level to exit. However, just noticing on the daily basis, as I drew that trend line in on the weekly, you do have a gap fill zone down here. So I may hold this short all the way down to the 135 area until that gap is filled. If we look at Tesla, Tesla had a little bit of a reversal candle. Again, you do have a small gap up at the charts. If you haven't started shorting Tesla, I do think that would be another opportunity, amazing price level to start a new short position. We'll probably trade it in the day trade room as well, just for a quick scalp and profits as it bounces into that resistance level. Ultimately, I do think Tesla, you start seeing it test this lower or this middle channel trend line, this dotted line. Let's just throw on the moving averages and see where they coincide. So as you approach that middle channel line, you'll have the 50 and the 200 in close proximity coming up as support. I do expect a bounce there. Generally speaking, Tesla is a very technical stock. It has people waiting at all levels to buy the dip just because of how hype it is and well known the company is. Looking at the biggest mover on the day, and I am very, very happy with how this trade has transpired. HPQ. So I love when stocks get these huge pops on news, and I never trade news to the long side unless it's a potential buyout that I know or some miraculous new innovation invention. But when it's simply an investor announcing a big position in a company, okay, you have to understand the time frame as to when the investor bought and as to when the news is disclosing it. So today we had the news, it was all over the news. Warren Buffett takes a huge stake, I think it was 10 to 11% in HPQ, that's his stake. So I'll admit it, it's a massive stake. It's a really big stake in HPQ. But notice the common theme we've been hearing now, same thing with Twitter. We heard Elon Musk took a controlling stake in Twitter, over 9%, 9.2% with the board, and now a seat on the board. So all of these stocks are getting these pops on these news-based events about big whales coming in. And the investor, the average retail investor who's now chasing this price action, if you look at this intraday price action, and I'll just show it to you here, you had this massive gap up, and then this was all retail money chasing it even higher. So this gap up, it could argue that there's a lot of smarter money, VC money, institutional money that played it. But this move here is all retail getting into it. And should HPQ be up this high? I certainly don't think so. When you factor in that Warren Buffett probably bought, 2 to 3 to 4 weeks ago, potentially at these lows, and now it's all the way up to here because people have chased it higher. Warren Buffett did not buy at these prices. He bought several weeks ago at this lower range, somewhere in here. I'm sure we'll find out eventually soon once his full filings are disclosed. But it certainly is not a stock to chase. And the beautiful thing, and why we started shorting it, our average is roughly here. I'll just put it in. I think we're slightly out of the money, but I'm certainly not worried about this stock. Being the fact that it popped up, a good, what was it on the day? Let me just check here. Up 14.75% on the day. At one point it was up over 20% on the day. So we just slowly started accumulating a nice solid position at a really healthy level. And one of the reasons why I'm so happy with the closure of the stock is, notice here you have your daily reversal candle, which was your all-time high. And here you had your pop-up new wick high, but you closed below this reversal candle. And in technical analysis, when you close below a reversal candle, this reversal still holds true and it still holds the power. So if this stock can't even close higher than the previous all-time high, when you have such a big mega news event like one of the most successful value investors of all time, Warren Buffett, helping propel the stock up, then this stock doesn't stand a chance to keep rallying up, in my opinion. Now you may get a few more straggler retail buyers in as they see the news tonight and want to get in tomorrow, but the fact that you could not hold it on this spectacular news announcement, you closed below on a daily basis, A, it shows this reversal candle still in effect, and B, it definitely points to the probabilities of more downside. And look at this major gap that you have on the charts. So just comparing, if this was to fall back to fill this gap, which I certainly think is a high probability, that's a nice 10% gain, and I think that could do that within a week or two. If you want to hold it longer, will it fill this gap? Most likely will. So that's probably doubling your, thing to 18, 19%. So I think this was a no-brainer trade. We got what we wanted to see, a close below the original reversal candle at the all-time high shows definitely bearish strength despite you've had a positive pop. But this is a news pop. News rallies do not last. Just like GameStop, just like Twitter. If we go back to the Twitter chart, you think about Twitter. Let's jump onto Twitter here. You think about what happened with Twitter here. This was when Elon announced it, this huge gap up, that he was taking a controlling stake, even though he bought around early March. I think he had buying programs in, actually since for the whole year. I think January, all the way in January, Elon was buying in this zone down here. And then you had this huge pop-up on the back that, oh, Elon's buying, everyone thinks Elon's buying up here. No, he bought down here. And who do you think is unloading into the smaller investors? Look at this light volume and look at this sell volume coming in after this massive Elon news pop event. So if you think about the peak in Twitter and to where it's dropped roughly 3 days from Elon's announcement ago, it's fallen 12% already. At the lows, without today's rally, it was down 15%, give or take a few. So if this HPQ is going to be any guide as to, if Twitter is any guide as to how HPQ should go, it should follow the same path as Twitter did, where you have this initial pop on news, which people get sucked into because it's Elon, it's Warren Buffett, the so-called richest men in the world, but you cannot follow them because when you look at where they've bought, they're not buying today. They've bought, they've done their buying. They're potentially selling into you. I'm sure he owns a bigger stake than just the one he purchased today. So you often see these big news headlines of these billionaires who announce these massive buys or positions at the very peak of stocks or just before we're about to roll over into a bear market.